All right, well, thank you all so much for coming to this panel on state and local regulation. I want to focus this conversation on, what state and local regulation matters, what are the stakes in state and local regulation, what would be good policies, and what it would mean for a state to create sort of a model policy for Bitcoin and Bitcoin companies that would attract innovation and talent. Although first, the elephant in the room here is that the biggest threat to Bitcoin is from the federal level. And so I think this conversation needs to be had in the context where we're really worried about, bills that would come out about especially anti-money laundering, taxes at the federal level based on mining, and a lot of the stuff that we're seeing out of Elizabeth Warren's office that would preempt some of this state-level conversation. So I think to start, Yael, you want to talk about the sort of thought you've done about state-level preemption and what is the role of state-level laws and regs in a world where federal policy is what we're mostly thinking about in the Bitcoin space?
Absolutely. So we have a very interesting model in the United States. We have an interesting constitution, and we have these laboratories of democracy. And one trend that we've seen in partisan politics is this idea of preemptive policies. These are rules that are passed at the state level that preempt any laws passed by municipalities or county governments. This has been used for preemption on plastic straw bans, plastic bans. It's been used for cannabis shops, that basically you should have cannabis shops available in every county. You've also had it on sort of the sanctuary city idea, to where localities or local police departments should not be interacting with the federal government or the immigration authorities. So the idea is that this is already used as a tool in partisan politics. Wouldn't it be interesting if we did this just to preempt bad policy on digital assets and Bitcoin at a local level? And there are growing movements across the entire country in various states to either put up one crypto asset or put down all the other crypto assets. There are various moves. I think this strategy of doing preemption is one of the more constitutionally sound, appropriate, and technologically neutral ways that we can promote Bitcoin and other crypto assets if people want to have fun with them. I think that is a responsible way to do it because we're using the American model, we're using federalism, and I think that is a much better approach than prescribing positive rights, that people have a right to use Bitcoin or mine. These are natural rights that exist. We do not need them written into law. They're already there. And by putting these things into law, the fear that I have at the state level is that it's just that much easier to take them away. We have to recognize the negative rights that we have to already do Bitcoin in any way possible. We don't need to have positive rights. And I think preemptive strategies, preemptive regulation of localities, municipalities would be great for mining, for taxation, money transmission licenses, all the rest. There could be some interesting stuff there.
So let's pull on this thread a little bit more and talk maybe more specifically about what types of policies we would want to have these preemptive laws about. I think, as you mentioned, there's this difference between negative and positive rights. And one of the amazing things about the US Constitution is that the rights that are not reserved for the federal government or for the states are the rights of the people. And I think one of the danger of state-level legislation and state-level policymaking is that we erroneously suggest that we need states' permission to do things with Bitcoin, like self-custody and like doing peer-to-peer transfers. And we want to make sure that we respect the U.S. federal Constitution protection from that, and that we don't create sort of just partisan signposts. But what are the types of policies that we do want to have at the state level that are appropriate in that form?
Yeah, Chuck. I'd like to jump in there. So on the front of the states are the best laboratories for democracy, the states are, we can move so much more quickly. We're a lot more nimble. We have the communities behind us. And so when you talk about states are the best laboratories for democracy, if you take in the idea of like, hey, instead of running up the ladder and, fighting all that friction that's in DC by design, why not just go to the states and pass an idea, an innovative piece of legislation in 4, 5, 6 states, see how it works, then take the best practices and then maybe go to the federal level, because very often we're not going to get it right the first time, especially with these innovative technologies. And then second, on like what is a state policies that would be really, really effective has already been created. It's the Uniform Law Commission's Uniform Commercial Code, right? State law is all around this personal commercial transactions. It's not federal law. That's handled at the state today. And so we had the 2022 amendments that came in and expanded the definition of money to include controllable electronic records. And so this is something that's actually dire for us to pass in as many states as possible. So far, we've only had 16 states out of the 50 that have passed it. And what that means is what we assume to be our protected, when I send Yael a transaction or I lend any sort of Bitcoin to somebody, like none of those transactions are protected today unless you go to each of your states, Secretary of State, and like register that transaction there, and then it becomes, the whole idea of decentralization. We have to actually centralize all those transactions for them to be actually considered protected today. And so what we need is the UCC amendments to be passed so that we can expand the definition of money to include assets like Bitcoin, have all of our commercial and personal transactions continue to be decentralized and also protected. And that's something that we're working on right now.
Got it. So just to restate what you said a little bit, as opposed to state level bills that say you have a right to self-custody Bitcoin, which we would want to maintain, you have a right to anyway, or state level bills that say you have a right to transact, which we think you have a right to anyway. We should have state level bills that clarify the legal status within other areas of state law. So the UCC, the Uniform Commercial Code, is really about contract law and commercial relationships. And you're referencing Article 12, which is the recent amendment to cover digital assets, including Bitcoin, where the benefits of that are really about what does it mean to legally perfect an interest in Bitcoin, to be able to show that you own this quantity of Bitcoin that you could use as collateral in a financial transaction or pass to someone else.
Right.
So what do you see in this Article 12? What do you see as sort of the high points for being able to use Bitcoin in whatever use cases you think are valuable, and what are the potential pitfalls in your view of the Article 12 framework?
I think the Article 12 framework was built over many, many years with a lot of knowledgeable legal experts. And so they don't call it Bitcoin, they don't call it digital assets, they call it controllable electronic records, kind of built around the idea of Bitcoin, right? You either have it in your custody or you don't, right? You either have the private keys or you don't have the private keys. And so that's where they came up with the name of controllable electronic records. Sorry, I just lost my train of thought.
No worries. Let me jump in for a second.
Yeah.
I think one of the challenges that laws like Article 12 can help solve, just to make it more concrete for folks, is when you have old sort of legal concepts and then you have new technology that doesn't map onto perfectly. One very easy to understand sort of simple example for Bitcoin is, what does it mean to possess Bitcoin or to own Bitcoin, right? You can have legal ownership, which means you are the rightful owner, according to the state. And then there's this concept of possession, which matters in both civil and criminal law. But what does it mean to possess Bitcoin? The obvious answer would be to have private keys. But what if multiple people have private keys? What if the private keys are posted on the internet? What if there are restrictions on those private keys because it's part of a multi-signature setup, or using, a script like Miniscript that says you can, block a transaction, but you can't unilaterally send one? These are the sort of types of things that we could clarify under state law to make it so that you have fewer examples where, some octogenarian judge who does not know what Bitcoin is has to decide how you shoehorn these concepts into pre-existing legal terms. And I think that's a great example that you bring up of how states can help clarify. Yael, you mentioned before having sort of technology neutral laws and sort of the pitfalls of highly partisan pro-Bitcoin laws. How do you think about framing some of these laws or regulations in a way to make sure that they are policy neutral and they have staying power and they really have buy-in from the community?
Yeah, I think not every state lawmaker is going to be a secret Bitcoiner. We obviously meet a few on our journeys or in conversations, or there are perhaps some in this room or at this event. But most people are not going to. They don't have a very complicated introduction. They have not watched the hours of YouTube that you have. And for them, the best framework that we can use as advocates for this technology is to be as technologically neutral as possible. Whether it be the framework of digital assets or electronic controllable records, I think that is important to state, because there is going to be a lot of innovation that is happening on other chains. And that freedom to transact should not be sequestered and then only one chain is preferred, because the government should never be in the position of choosing winners or losers. It should be up to the marketplace, to us as consumers, to figure out what we like, what we want to use. But all of those activities and that new technology should all be protected via the same regime. That's why the Uniform Commercial Code, Article 12, again, it scared a lot of people because there was a lot of misinterpretation of what it meant and what it meant about money and what it meant about Bitcoin. And I think that led to a lot of bad policy positions in states where they did not adopt it. And in those circumstances where you have great Bitcoin companies that want to figure out how to do collateralized lending, they want to figure out how they can do treasuries, how they can do borrowing, lending, all of that, they're not able to do so because they don't have the commercial law framework in order to present that and for individuals to be protected. Because we can all say all day, you know, not your keys, not your coins, but when that argument has to enter a courtroom or has to enter some kind of transaction or some kind of legal construction that you've put together, you're going to want that framework there. I think that's pretty important.
Yeah, I think to give a little bit of background for the audience, if you're not familiar with the intimate details of the fight around UCC Article 12, the misunderstandings and sort of politicization that Yael is talking about were largely around, right-wing politicians being displeased with the idea of CBDCs. And certainly I think this is an area where Bitcoiners tend to be aligned with politicians that are anti-CBDC. You know, Bitcoin is at its heart, it's freedom money, it's meant to be permissionless, it's meant to be in some ways a haven from debasement of state money and surveillance of all transactions. But that sort of view of CBDCs are dangerous got added, or got, I think, wrongfully associated with what Article 12 is trying to do, right? That saying money can be digital, money is capable of, being on a blockchain, money is capable of being purely digital, and that was seen as this is going to be, the first step towards CBDC enslavement, when actually it's really not. It doesn't provide for that, and there was a lot of sort of smart buy-in from thinkers and professors and lawyers in the Bitcoin and crypto space in how to frame that law. And so again, it's really important that our discourse around this is careful and we talk about specific risks and benefits rather than narratives and sort of rallying cries.
I'd like to just summarize, the UCC Article 12 amendments basically give Bitcoin and digital assets, controllable electronic records, the same legal tender status as cash. It treats it like property. And so if you want to be able to transact in Bitcoin, if you want to have other products offered in Bitcoin, you want this uniform law to be passed across all states, because most of us are not just doing transactions in our little tiny states, we're doing it across the US and across the globe. And so, for the opportunity to normalize this digital asset class, we really need this law passed.
For sure. So, all right, broadening it out a little bit, I'd love to explore the question of what does good or bad state policy look like if we're thinking about going forward, if there are people in this room who want to advocate in their states or municipalities for good rules. I think it's helpful to start, what are the challenges at the federal level, where do we want to stay out of the way, and, how does that impact what state laws we want? So I would say, in the crypto space, the two big issues are, the securities law status of tokens. Thankfully, that's not something we have to deal with in Bitcoin because we don't have a founder who's around and there's no company, and Bitcoin is in no way a startup, like a lot of these other tokens are essentially a startup. So we're pretty much out of the SEC woods, which is terrific. However, there is this really difficult question that we're going to have to face, I think, primarily at the federal level, on where is the line between a regulated financial institution, the legal technical term being a money service business or a money transmitter, and pure code on the internet that allows for peer-to-peer transactions in a way that's not regulated, as if those same activities had gone through a centralized institution. This is important both at the Bitcoin base layer, around the question of, do miners or nodes have KYC obligations? If you look at the Damel bill, the Elizabeth Warren bill, it's trying to impose those restrictions, which, by the way, would be technically impossible to follow on everyone who participates in the Bitcoin network, including miners and home node runners. But there's going to be stuff built on higher layers of Bitcoin, right? There's going to likely to be federated mints. There's going to be decentralized exchanges. There's going to be covenants and Bitcoin smart contracts and stuff that's coming down the pike. And there, we really want to make sure that we have a light hand in regulating the stuff that's on-chain, as opposed to regulating companies that are building off-chain applications. So with that sort of being the boss fight in mind, what would be, you think, some either helpful or really unhelpful state policies to sort of support where Bitcoin needs to be?
Yeah, I think you mentioned the money transmission licenses, and we heard today from Senator Gillibrand that the bills that they've introduced or discussed with their colleagues always have a role for the states to really provide that frontier sort of oversight or regulation, because they're closest to the entrepreneurs or to the businesses or to the consumers who are using those products. I think we have to look at those money licenses. We have to figure out a way that we can offer these in as many states as possible. There are multi-state licensing systems that exist. This is great. It'd be great to see at the state level states who will open up reciprocity. They say, hey, you've got a license from Ohio. Everyone is welcome in Arizona. Arizona opened up their occupational licensing not too long ago, meaning if you have any occupational license, if you're a nurse or a florist even, you do need a license in many states, you are welcome to practice in Arizona with no other tests or requirements. If we were able to add that to money transmission businesses, meaning anyone who sends, receives money for customers on their behalf, that might be something that would really help. I think that would be really interesting to see. I mentioned the preemption before. One thing that I think will now be vital, there are Bitcoin miners in the room and at the event, there's going to be a lot of local pressure against Bitcoin miners. What's that going to look like, whether it be taxation, this is already being discussed at the federal level, zoning regulations. There has to be ways at the state level that we can preempt bad municipal and local policy. There are also a lot of discrimination pricing regimes that are now being discussed or introduced in some states. We have to figure out a way that we can also preempt that, because that will impact Bitcoin miners who, when we are trying to onboard all of these AI GPUs, will be doing exactly the same thing. How do we know that we're not going to penalize these other entrepreneurs in this space who are trying to provide value? I think these are kind of two very good avenues. The question of taxation, this is one way above my head. We definitely don't want more. So if we can preempt more of that at local or state level and allow people to transact using cryptocurrency as they already can, just making sure that no localities ban it, I think that would be an advancement as well.
To add on that, I'd say there are two other things that you can do at the state level that are doing very well and very effective in kind of moving the ball forward. So what you don't want to do at the state level is hijack any community, right? It's bad way to do policy is you fly in like a seagull and you poop all over and then you leave, right? So you want to work with the hyper-local communities, kind of educate them as much as they need, and then walk them through what they need versus what you think they need. And so what we've seen as effective as the U.S. Blockchain Coalition is sandboxes. I talked to some agencies, and they're like, "Oh, sandboxes are so old. They're so not cool anymore. We want to do a DAO bill." I'm like, "No. Look at the sandbox, and instead of looking at it technology by technology, maybe look at it as an emerging technology sandbox. Technology is moving faster and faster. So why are we standing up these one-off sandboxes for blockchain and then one-off again for AI? Let's do an emerging tech sort of sandbox." And then on that same note, we have these task forces or work groups that are being set up state by state. It takes a year plus to go and get them set up, and then it takes them a year or two to actually go and do their research and policy discussions and come up with the recommendations, and then finally 2 to 3, 4 years later you get the recommendations. It takes too long, and to stand one up every single time we have a new technology, that's just not going to scale. So another recommendation that we have is, hey, stand up an emerging tech standing kind of council, work group, task force, and pass along that knowledge as people come on board, new technologies come on board, bring in new experts, kind of share that legacy of history and knowledge amongst people and experts inside of your state. And so I think those are two ways that I would say.
I love the regulatory sandboxes. They've been a huge success in places like Utah. We tried in North Carolina as well. I think it's really cool because it's just like, hey guys, in this area, we're just not going to regulate you too hard for the next 2 or 3 years. So innovate as much as you can. We'll figure out the rules later. That's awesome. It's creative. It's a way for entrepreneurs to have all this energy and motivation, and they're not going to be stymied by bureaucracy or regulation of people who don't understand the tech.
Well, I look at it as more like public-private partnership. Let's have a conversation and let's educate the agencies that are involved in that sandbox as we go through the process of, bringing entrepreneurs in and vetting them and talking to them about what they're actually doing with their business models and what problems they're solving and who their customers are and what does it look like to run that sort of business. It's a really great public-private exercise and discussion.
Cool. So again, to bring in a couple of concrete examples of some of the stuff you both brought up. So an example of, I would say, the seagull approach would be New York's bit license regime, which was meant to be very forward-thinking, and it ended up being this disastrous example of regulatory capture where you created a needless regulations that take millions of dollars to be compliant, and a lot of the great Bitcoin companies out there can't operate in New York, right? Strike, great Bitcoin company, you can't get it in New York. Even blocks, Bitcoin functionality is severely restricted in New York because even for big companies, it's really, really difficult to get a bit license, and it just ends up being gatekeeping that helps large incumbents. I would say in terms of a wish list, though, right? I work with a bunch of Bitcoin startups, and definitely the biggest issue for them is this: are you a money service business? Are you a money transmitter? And a lot of that is not really clear under existing law. We're relying on almost half a decade old Treasury guidance that really says the key to whether you are a money transmitter or money service business is whether you have unfettered access over other people's money. The biggest way this line tends to be drawn is between what are called hosted and unhosted wallets, or what we would call a real Bitcoin wallet versus a custodial wallet, where custodial wallets are much more heavily regulated. They have KYC requirements that, for example, an open source non-custodial wallet has. And I think the outcome of this is we're going to see more and more innovation move to purely on-chain, purely non-custodial models that are not going to be gummed up by federal or state regulation. And I think ideal state policies will recognize that fact and will provide legal and technical infrastructure for people to be able to build non-custodial, as trustless as possible tools. So one example is sort of decentralized organizations. This is very big in the non-Bitcoin crypto space called DAOs, but definitely applies to stuff happening in the Bitcoin space with federations like Liquid or Federated Chummy and Mints, where you have a group of people who are working together in some sort of unofficial way to create a piece of on-chain infrastructure. So a very simple example of this is the Liquid network, which is a side chain to Bitcoin, where you peg in your Bitcoin, you get Liquid Bitcoin, which is limited by the amount of Bitcoin. So they're not creating their own token, they're not fractionalizing Bitcoin, you're just moving it over to a different environment where you can do different stuff, and then you peg back out. And your ability to do so requires the consent of a certain number of federated members who are businesses that are not necessarily associated with each other, they're just trusted people in the space. The real question at the federal level is that federation, is that group of people going to be regulated as a financial institution or not? But one of the factors that can make it less likely that you'll be regulated at the federal level is that you don't have some sort of legal entity that everyone is a part of, right? If you're a company, it's easier to say, okay, you're a financial institution, which leads to these sort of purely on-chain, what are called unwrapped federations. The risk there is if you don't have a limited liability entity and you're sued, perhaps all of the federation members can personally be liable, which is also not a good outcome. So one, I think, great example of state level legislation we're seeing is in Wyoming with the decentralized UNA Act that allows you to have unincorporated groups that are providing some sort of on-chain infrastructure that gives you limited liability protection while still maintaining the purely on-chain sort of decentralized nature of these organizations that will help you not fall under the sort of money service business, money transmitter license regime, which, by the way, if you're a startup, it'll take you at least 6 months to a year to get your money transmitter license and generally costs $1 to $2 million on average, which is just impossible for a pre-revenue startup. So this is really a deep problem for innovation in the Bitcoin space. And I think one of the examples of state laws that can help with that.
Yeah, there's going to be so much pressure on custodians. We've already seen that a lot with different companies that have lost their money transmission licenses, and all of a sudden you could not buy Bitcoin on Strike or Swan if you happen to live in South Dakota or if you happen to live in this state. So a lot of that, people were really unclear why that happened, what was the issue, and there are all kinds of backroom deals and conversations, and is your surety bond up to date, and do you have enough in fiat to pay everyone off? But I think the legislative attacks that will come just after custodial, I just see this traveling between the US and Europe, and even if Dubai, if you look at how digital assets are approached, there it's totally open sort of ecosystem where the people can exchange things, can start companies, you can have custodial services. In the US, increasingly, we're kind of being cut off from some of that innovation. And there are a lot of companies who just won't touch anyone who's a US resident. Also because of FATCA, also because of Bank Secrecy Act, all things that Natalie discussed this morning, which were great. But we're going to see a lot more pressure on the custodians. So I think, much to your point, Zach, we will see a lot more people move to the non-custodial model, really trying to empower people. It's legit why Bitcoin exists. It's why we use Bitcoin in our everyday life, because we can have it ourselves. We have our seed phrase. We'll have control. At the same time, there are businesses that would like to provide value to others who probably don't want to hold their own keys. That's fine. They're great to do so. I hope we can provide them a good legal environment for doing that too.
I was just thinking, I think the US is probably slower on the regulatory front than the other jurisdictions around the world, because the other jurisdictions around the world were able to organize very quickly and build these public-private partnerships, like the SROs out of Switzerland and Japan and Korea and et cetera, et cetera. So I think if we can figure out a way to help police our own environment. We're about to go into another bull run, and what I would fear most is like having another Mashinsky sort of FTX episode, right? We do not want that. And so what can we do to create these sort of like safe lists or blacklists? We don't have anything like that. And it's so hard, as a consumer or even a person that's been in this space for 6-7 years to know like who's good or who's not good, who's actually got the proper operations behind the scenes of their company, and they're actually operating with good intentions and good compliance and good procedures and good standards. We don't have any of that. And so if there's a way for this industry to organize and create that sort of like clarity ourselves and help the regulators, because if you talk about New York too, like we just did a private dinner with Superintendent Harris, and like what I'm hearing is like it's really hard for the regulators to put the resources to go and like even regulate, even if we had regulatory clarity. So like I don't think it's rocket science to be thinking about what can we do to help keep consumers safe? What can we do to keep the bad guys out from causing more damage? And then how do we make it easier for consumers to take advantage of this technology, right? If we're not improving lives, what are we doing?
Yeah, I think that's a great point, and I think it's a little bit of the flip side of we want the states to, as much as possible, stay out of the way of on-chain activities and what people are building in sort of trustless, decentralized manners, and to the extent possible to support that type of building and innovation. On the flip side, though, when you have sort of centralized risk points in crypto, and Celsius and BlockFi are great examples, maybe we do in some cases need tighter regulation, or at least more disclosure, that if someone's holding themselves out as a crypto bank providing risk-free yield, that's dubious to begin with, and should there be liability attached to making those claims? And then if you're going to make those claims, do you have to disclose where the yield is coming from?
Should. When Mashinsky, I interviewed him. Where's that yield coming from? How are you able to provide these like high rates? Well, we loan out your Bitcoin, and we charge 20%, and we give you a kickback instead of keeping it all to ourselves. That's not what he was doing, right?
Yeah, and I think there's a reality here that Bitcoin is a digital bearer instrument, which is an incredibly powerful innovation and the reason why we're all here today. But that also has some risks attached to it, right? Digital bearer instruments are really easy to steal. The transactions are non-reversible. And so that is always going to be a haven for people who want to scam and steal money. And if you look at the different sort of eras and cycles of Bitcoin, those scams look different every time, right? You had something as unsophisticated as the BitConnect the first time around. And then last cycle you had these sort of yield-bearing companies that all ended up losing people's money. And my guess is this time it'll be something around ETF derivatives, right? People will find ways to steal money. But we need state law frameworks in place. I think disclosure is really important. If you're going to take custody of someone's Bitcoin, that you have to disclose how it's being held, what you're doing with it. Perhaps certain security audits, right? How are you holding, if you're custodying other people's Bitcoin, what kind of security setup are you using? How are keys managed? And definitely education at the state level is important. Do you guys have other ideas of?
Like all lawyers like yourself, like go through the terms and conditions on behalf of citizens everywhere who are legally dumb and help interpret, you guys, don't use this service. They just changed the terms of service again on you. We need people to do that.
Yeah, and I think it is important because I think most people that use Bitcoin in the future will not use it in the self-custodial way that many of us already do. And those of us who do stay the self-custodial route, and let's chat, let's connect our lighting nodes after this, but there are ways that we're not going to interact with that system, but we want our grandmothers and mothers who are going to use that system to be protected. And I think you've seen a lot of the entrepreneurs, because that's what the entrepreneurs need. They need to have at least that clarity to know what they can offer their consumers and what protections that they'll have. And you can have great tools that show, hey, what is actually your treasury? How much do you actually have, in your wallet that is be the custodian for millions upon millions of people? I saw something on Twitter today about Coinbase. Coinbase as a custodian is taking like over 50% of like all the mining revenues. Like everyone who wins the blocks, they're essentially Coinbase as their custodian. I mean, that is a huge attack vector. At some point in the future, that could be an issue. So what are the rules that are going to oversee sort of the custodial model and Coinbase? And of course, they went through the license thing, which is, that was a perilous journey. I hope we can have better alternatives in other states. But yeah, it's great to allow the entrepreneurs to build. Don't have them mired with all the different rules and regulations and things. And yes, we'll create more jobs for lawyers, but we want to have more entrepreneurs and more consumers benefiting from those as well.
And we also need to be looking at who's the trust institutions behind all of these different entities, right? Right now, it's Coinbase is the main back end for all of these ETFs. I think that's a big worry. We need someone else. I mean, Coinbase is great. I think they do a lot of great things, but we need other options because everything right now is centralized in the ETF world on Coinbase. We need other trust entities, and I think the OCC gave 3 charters, but we don't have 3 operating trusts on the back end. Prime Trust went down, but what is the other alternative? So we need other entrepreneurs kind of innovating continually on the trust and banking side, because we need other options.
Yeah, I think that's one of the sort of remarkable facts about Bitcoin now. It is a globally important macro asset, well over $1 trillion in value, and yet the infrastructure around it is pitiful compared to its size. And we really need people to build good financial institutions around Bitcoin that are Bitcoin native, that take security seriously. We need insurance, we need Bitcoin banking, and I think perhaps the best opportunity at the state level for change is to provide support for people who want to build that really necessary financial infrastructure.